In today's video, I am going to teach you how to draw support and resistance levels in Tradingview. We'll keep it clear and practical, so you can mark your charts with confidence and read price action more effectively. Start by opening your charts. With the chart visible, switch to a higher time frame like the daily or the 4-hour. Higher time frames tend to highlight more meaningful levels because they smooth out the noise you see on smaller intervals. Now scan for areas where price has clearly bounced at least twice. These repeated reactions are what give a level its importance. Think of prior swing highs and swing lows where candles turned around or stalled. Those are your candidates. To mark a precise level, use the horizontal line tool. Click the trend line tools icon on the left toolbar, select horizontal line, or press Alt+H, and then click on the chart where you've spotted those repeated touches. A well-placed line often aligns with multiple wicks or bodies, confirming that buyers or sellers respected that area more than once. However, rather than relying on a single price point, it's often more reliable to mark a zone. Use the rectangle tool by selecting rectangle or pressing Alt+J. Draw it to cover the full wick and body range around the consolidation or reversal area. This creates a support or resistance zone that accounts for normal price fluctuations. Markets rarely turn on a perfect number. Zones reflect the real-world ranges where orders cluster, giving you a buffer that reduces premature entries or exits. If you want the fastest approach, automated indicators can help. Click Indicators at the top of the chart. Search for support and resistance and select support and resistance levels with breaks by Luxalgo. Or search for pivot points high-low and select pivot points high-low. To automatically identify significant swing points, these tools can quickly surface areas you might miss at a glance and are especially useful when you are analyzing multiple symbols. After adding an indicator, adjust its settings to suit your style. Look for options like left or right bars or look back. Increasing these values makes the indicator consider more bars, which typically produces broader, more conservative zones. Decreasing them narrows the focus to recent action, giving you tighter, more reactive levels. Calibrate until the zones match what you see in price behavior on your time frame. Combine these methods, use higher time frame zones for structure, horizontal lines for precision, and indicators for speed and confirmation. With practice, your chart will show clear, actionable areas where price has historically reacted. Thanks for watching.